Okay, let's unpack this. When you think about the global eyewear industry, uh, what comes to mind? Maybe a certain brand, those cool sunglasses you saw?
Or, yeah, the frames you might be wearing right now. But behind all that, there are these huge global companies doing some pretty complex stuff.
Absolutely. And today, we're doing a deep dive into one of the really big players, Safilo.
Yep. And we're getting right into it by looking at their 2024 annual report. It's packed, gives you a real window into their strategy, the challenges, the vision, especially for a company that's been around for what, over 90 years?
Exactly. And our goal here for you is to kind of cut through all the corporate speak in that
Yeah.
report. We want to pull out the really important bits, the insights you need.
So you walk away with a clear picture of who Safilo is today, what makes them tick, how they're handling this, constantly changing industry.
And what they're aiming for next. Think of it like the highlights reel, but with all the interesting context in those aha moments.
Right. So let's start simple. Who is Safilo?
Well, at its heart, it's this company with a really long history, over 9 decades.
Wow.
Yeah, dedicated to designing, making, selling eyewear, sunglasses, eyeglass frames, but also getting more into helmets, goggles, that kind of outdoor gear.
So sight, sun, and sport, basically.
Pretty much covers it.
And they're not just an Italian company, right? They're all over.
Oh, totally global. They're physically present in about 40 countries.
40.
Yeah, and then they use partners in another 70 countries on top of that. So that network gets them into something like 100,000 different stores worldwide.
100,000. That's just a massive reach. How do they actually sell all that stuff? What's the main channel?
Well, historically, it's been wholesale. Selling to opticians, big department stores, other retailers. That's their foundation.
Okay.
But the report makes it super clear they're making a big push now into direct-to-consumer.
DTC.
Selling online themselves.
Exactly, through their own digital platforms. And they've also been kind of upgrading how they deal with their business customers, like opticians in Europe using more tech since 2020 to streamline things.
Okay, so blending that old-school wholesale strength with a newer digital focus. Got it. Now, you mentioned the industry, and this is where it gets really interesting, right? The report suggests eyewear isn't as simple as it looks.
Not at all. It's really dynamic, super competitive. You've got the giant global companies, but also loads of smaller regional players.
Mm.
And it's quite fragmented, different product types, different ways of selling.
But even with all that competition, the report says the market's pretty resilient. Why is that? Why does eyewear hold up even if the economy is a bit shaky?
It really comes down to some basic, powerful trends. Demographics.
Okay.
The world's population is aging, right? And older people often need glasses. Plus, you've got rising rates of myopia and nearsightedness, especially in younger people.
Yeah, you hear about that a lot.
So more people needing vision correction, basically from a younger age. And, needing to see. That's pretty fundamental. It doesn't really matter what the economy's doing.
That makes total sense.
Yeah.
A basic need. And what about us, the consumers? How are we changing things?
Oh, big time. We're generally more informed now, more sophisticated about style, definitely more comfortable with tech. We want quality, sure, but also brands we connect with.
Right.
Digital channels are just essential now for finding stuff, for buying stuff.
Hmm.
And the big one's sustainability. It's gone from being like a niche thing to a real expectation, a must-have for a lot of people.
That's a huge shift. And Safilo, looking back at their own story in the report, they've had to navigate some massive changes too, haven't they?
Yeah, some major challenges. The report mentions key moments, like buying Polaroid eyewear back in 2012. That gave them that leading tech in polarized lenses.
Okay, that was strategic.
But then came the tough part. Big luxury fashion houses started taking their eyewear licenses back in-house. Safilo lost Gucci in 2016, then Dior in 2020. Huge names.
Oof. Losing brands like Gucci and Dior. That must have been a massive blow. How did they react?
It was definitely a shakeup. The report talks about this major strategic relaunch they did between 2018 and 2022. It wasn't just minor tweaks. It was about kind of reasserting themselves and changing their whole approach.
How so?
Well, a big part was pivoting away from running their own stores. They sold off their Solstice retail chain in the U.S. in 2019 to really focus hard on their strengths, wholesale, and building up that direct-to-consumer digital channel we talked about.
So get out of retail, double down on wholesale and online. What else changed?
They also streamlined their manufacturing. Between 2019 and 2023, they closed or sold off some factories, basically right-sizing their production to fit their new brand mix and what the market needed, making things leaner, more focused.
Sounds like a really intense period of transformation, adapting to the market, dealing with those license losses. So let's look at what drives them now. What's this Safilo way they talk about? Their philosophy?
Yeah, their vision is pretty clear in the report. They want to be seen as a sustainable leader, a partner people trust, and just really excellent at making eyewear.
Oh.
Their manifesto sums it up nicely. Looking for innovative and responsible solutions and embracing digital transformation to redefine eyewear. They stress that innovation and sustainability aren't separate tracks, they're an inclusive path for everyone.
I like that, an inclusive path.
And their motto is, Safilo, see the world at its best. Kind of clever. Links the product function to their bigger goals.
Yeah, neat tie-in. And the report digs into their core values too, right? 3 main ones.
Yep. First is people-centric. Basically the idea that people, employees, partners, customers are the core of everything. So creating a good work environment, helping people grow, building trust.
Makes sense. Foundational stuff. What's number 2?
Purpose-led. This is about balancing today's needs with tomorrow's. Focusing on projects that actually have a positive impact environmentally, culturally, socially.
So connecting business to broader responsibility.
Exactly. It's about doing things that contribute positively, not just focusing on the bottom line.
And the third value.
Innovation driven. And this isn't just about, new sunglasses styles. It's about looking beyond the usual way of doing things, combining aesthetics and function, really using digital tools across the board, and just approaching everything with curiosity and responsibility, pushing boundaries in design, tech, how they operate.
So people, purpose, innovation.
Yeah.
These aren't just posters on the wall. They're meant to guide their actual strategy.
That's the idea. The core strategy is all about growing sales through a balanced portfolio.
Balanced how?
Balanced across different brands, different regions globally, and different sales channels, that wholesale and the growing DTC part. It's all geared towards serving customers better wherever they are. And a big part is communicating what makes each brand unique through its design, its tech, whether it's for sight, sun, or sport.
And the report mentions 2 key things that make this strategy possible, like the engines behind it.
Exactly. They call them enablers. First is end-to-end digitalization. Basically, weaving digital tech and data through everything from designing glasses and planning production right through to sales and service. Helps them analyze stuff better, speed things up.
Makes sense. And the second one?
A clear sustainability roadmap. This isn't just a side project. It's built into their main strategy. Shared goals across the company to make sure their environmental and social aims are actually part of how they do business every day.
That's a perfect lead-in to talk about the products themselves and that balanced brand portfolio you mentioned. What's actually in it?
Right. So it's a mix. They have their own brands. They call them home brands, which they fully own and develop.
Okay.
And then they have licensed brands where they make and sell eyewear for other big fashion or lifestyle names under agreement.
Let's start with the home brands. The report calls out a few main ones.
Yeah, so Carrera is kind of their flagship, known for design, quality, aimed at people who live by their own rules. They use their history, but also push new trends. Then there's Smith. That started with the first proper ski goggle. So it's all about high performance, sporty style, outdoor life. Their motto is, experience is everything.
And Polaroid, we mentioned that acquisition, the polarized lens specialist.
Correct. They also highlight some faster growing ones. Blenders Eyewear, started in San Diego. Very vibrant, colorful, sporty, young vibe. Life in forward motion. The report says it's one of the fastest growing eyewear brands in the U.S.
Interesting.
And Privé Revaux. That one's about affordable, fashionable, celebrity-linked styles, Miami feel, durable, celebrating individuality. Plus, they have some older, maybe less-known brands like Adensco, Chesterfield, Elasta.
Okay, quite a mix just within their own brands, different styles, price points, and the licensed brands add another whole dimension.
Hugely important dimension. These deals let Safilo tap into the power of well-known fashion, luxury, or lifestyle brands.
How do those deals usually work?
Typically, Safilo designs, makes, and distributes the eyewear. They pay the brand owner royalties, usually based on sales, and contribute to marketing. Often there are minimum guarantees involved. Adding new licenses, like they did with Etro and Stuart Weitzman recently in luxury, is key to keeping that portfolio balanced and fresh.
And the list of licensed brands they have now is really varied.
It is. You've got D-Squared 2, that mix of Canadian roots and Italian style. Pierre Carton, known for being avant-garde, experimental. Portes, which was actually the first high-end fashion brand in China, described as having a global soul, urban spirit. And then huge names like Tommy Hilfiger, classic American cool, constantly reinventing icons across lots of products, including their glasses.
So that mix of owned and licensed brands is clearly central to their strategy. But, like we talked about with Gucci and Dior earlier, losing a big license really hurts. The report notes the Jimmy Choo exit impacted 2024 sales.
Yeah, it absolutely does. It just highlights how dynamic that licensed part of the business is and why managing that portfolio, balancing owned versus licensed, is so critical for keeping things stable and growing.
Okay, let's shift from the brands themselves to that inclusive path. You mentioned sustainability. The report structures it around 4 Ps.
That's right. People, product, planet, and partnership. It's their framework for embedding sustainability everywhere.
Let's take product first. Sustainability and product innovation. What does that mean for Safilo?
It's about fundamentally making things more responsibly, using more low-impact materials, think recycled stuff, bio-based materials from plants, things that meet certain eco-standards,
Okay.
and using greener chemistry in how they make things. They've got a specific target mentioned. By 2025, over a quarter of their new collections need to come from certified sustainable materials.
That's pretty concrete. How do they know if these changes are actually helping the environment?
They use something called life cycle assessment, or LCA. It's basically a deep dive into the environmental footprint of a product, all the way from getting the raw materials through making it, shipping it, using it, and eventually disposing of it.
Right, the whole life.
Exactly. It helps them see where the big impacts are and where they can improve. They're also doing things like cutting down on packaging. Smith, for example, apparently got rid of single-use plastic packaging for its winter sports gear and eyewear.
Good step. Okay, so that's product. What about planet, their broader operations?
Well, their main goal is just minimizing the negative impact from their factories and offices. Energy is a big focus. Their Italian plants have this ISO 5001 energy management certification.
Okay.
It's a standard for managing energy use efficiently. And get this, 95% of the electricity they buy comes from renewable sources.
Wow, 95% is high.
Yeah, and they even calculated how much CO2 they avoided in 2024 just from their own solar panels, over 1,500 tons.
Impressive. And they've set actual targets for cutting greenhouse gas emissions, too.
They have, using 2022 as a starting point. They're aiming for a big cut, 70% in their Scope 1 and 2 emissions by 2030.
Remind me what Scope 1 and 2 are.
Scope 1 is direct emissions, like from their factory boilers or company cars. Scope 2 is indirect, from the electricity they buy.
Got it.
They also have a Scope 3 target that's emissions from their whole value chain, like suppliers making materials or transportation. They're aiming for a 25% reduction there by 2030. That Scope 3 stuff is usually the trickiest because it involves working with lots of external partners. They're planning to develop a formal climate transition plan by 2026, too.
And manufacturing means waste. How are they handling that?
Yeah, the report says they generated about 3,200 tons of industrial waste in 2024. The focus is on being efficient, using better materials in the first place, and then recycling or recovering as much as possible. Their recycling recovery rate for industrial waste was 67% in 2024.
Okay, moving to the people pillar. They said people are central. How does that show up in the sustainability report?
It talks a lot about engaging with everyone involved, employees, suppliers, customers, communities, listening to what they expect. For employees, it's about a good, safe workplace development opportunities. They even have this cool thing called the Eye Room, offering free eye exams.
Nice perk.
Yeah, and they share data on workforce diversity, nationality, and leadership, age groups, gender balance. Plus, they mention investing a lot in training, over 81,000 hours last year.
And the last P, partnership. This is about the wider value chain.
Exactly, because their impact goes beyond their own factories. They've mapped out their whole chain suppliers, their operations, customers. A big focus is making sure their suppliers, especially the ones actually making components or assembling glasses, often in Asia,
Right. Tier 1 and 2 suppliers.
that they're following responsible practices.
How do they check that?
They have suppliers sign up to a code of conduct covering ethics and human rights. And they do audits. They did 142 social audits in 2024, mostly in Asia, using an external company to check compliance. They also mentioned paying suppliers on time and planning a specific policy for smaller businesses by 2026.
And finally, connecting with customers and end users on this. How does that work?
Well, mainly through their wholesale partners and that growing online DDC business.
Hmm.
Talking directly to people, like at big trade shows, helps them understand what consumers want, including around sustainability. They focus on product value, diversifying the range. They also mention quality controls and after-sales service now for online customers, too, to handle any product issues. And cybersecurity is key, protecting customer data, especially with more online sales.
Okay, let's switch gears slightly for a quick look at the financials and how the companies run the governance side. The report mentions the tricky economic climate.
Yeah, it definitely sets the scene. Macroeconomic uncertainty is a factor. They talk about managing financial risks, like credit risk, by not relying too heavily on any single customer. Market risk, especially currency fluctuations with the US dollar, they manage using hedging tools like forward contracts. And liquidity risk, just making sure they have cash flow sorted.
And the actual 2024 performance numbers.
So net sales came in at 993.2 million. As we said, that was down slightly, about 2.3% at constant currencies. And the main reason was that Jimmy Choo license ending, which affected sales pretty much everywhere compared to the year before.
Right, that license exit really shows up in the numbers. How did the different regions do?
Europe actually did pretty well, grew in the mid-single digits. North America was down a bit. The report points to things like the election year maybe having an effect, a softer market for sports eyewear, but their regular prescription frames did well there.
Okay, and beyond just sales, any other key financial indicators?
Yeah, they highlight improvements in adjusted EBITDA, that's a core profitability measure, and also net debt. Both moved in the right direction compared to the previous year. EBITDA up, debt down. So better profitability and less leverage, even with the sales dip from the license change. They do mention some one-off costs in both 2023 and 2024 tied to things like those license terminations and restructuring.
Got it. And briefly, on the governance, how the company is structured and overseen.
The report outlines the board of directors, 10 members, decent gender balance, mostly in the 50-65 age range. They have specific committees, like that sustainability committee they set up in 2021, showing it's important at the top level. Also, a supervisory committee, and their independent auditor is PwC.
And just general business ethics?
They have this worldwide business conduct manual, the Safilo Way, updated recently. It lays out their ethical standards. They say zero tolerance for corruption and bribery. And importantly, they reported no actual incidents of corruption in 2024. That's a good sign for their internal controls.
Wow, okay. We've really covered a lot of ground in this deep dive into Safilo's 2024 report. We went from their long history and global position,
Yeah, through those big strategic shifts they made, dealing with challenges like losing licenses.
looked at their core values, the Safilo way, how they put their strategy into action with that brand portfolio.
Dug deep into their sustainability efforts across people, product, planet, and partnership.
And finished with a snapshot of their financials and governance.
Yeah, this really gives you, our listeners, the key takeaways from that dense report. You get a solid feel for how a big global eyewear company works today, the challenges, the adaptations, and what they're focusing on going forward. It shows that balancing act between heritage, innovation, and responsibility.
Absolutely. It really underscores how complex it is to succeed globally while navigating constant change. Which leads us to a final thought for you to chew on. Think about these huge trends. Digitalization and this massive push for sustainability in everything we buy. How is the eyewear industry traditionally rooted in design, craftsmanship, that physical product going to balance that timeless appeal with the increasing demand for, high-tech features and genuinely sustainable production right through the supply chain? What unique space could a company like Safilo, with its history and its stated focus on innovation and sustainability, carve out to lead that evolution? Definitely something to ponder next time you see the world through a pair of glasses.